Hey, fellow traders. I'm going to have to kind of step away from YouTube and social and things like that. I've got to kind of put my attention and focus somewhere else in life. Unfortunately, life is calling, and I'm just going to have to handle that. But before I go, I'm going to make a quick video and basically just kind of break everything down and show you the common denominator and basically show you the easiest way to make it basically difficult to lose. This is what I'm doing in every single strategy, method, time frame, scalping, long term, Bitcoin, CFDs, indexes. It's all the same. So basically, I'm going to go ahead and get right into it to try to keep this video short. But all you need to know is that if you found your levels, then the only thing you need to do from this point is really only just a couple of things. So let me go ahead and grab my pen out. And let's say, doesn't matter what time frame this is. You could be scalping, you could be swing trading, you can trade the weekly. Doesn't really matter. You've just determined that these levels are a good enough distance apart to where you're going to have time to make a decision while price is moving between them. And the whole method of what you're doing is pretty simple. So right now let's say for example we have price right here. You've got your pattern of levels and we're watching price and we see that price is not at a level. It hasn't reached this level, it's not at this level. So at this point the only thing we can do is nothing. So if price continues to come down and reaches the level, well, now we have a yes for the question of, is price at a level? So once you have that first question answered as a yes, then all you're going to do from that point is either take a flat out guess or look and say, okay, we're on an uptrend. The market's moving up. This should be support. So I'm just going to guess long here. Now, from this point, only one of two things are going to happen. Either price is going to move up or price is going to move down. That's it. Sideways doesn't count. That just means it's not moving at this time. So you now have your trade on. You've taken a buy. Let's say, for example, here. And it works the same for sells. But as you've got that trade on, the only thing you have left now as an option is to wait. You put the trade on so you're okay with the risk, and all you're going to do is wait for price to leave this level. Now from here it's either going to go up or down, and let's assume that it goes up. So at this point you're getting it right. So what do you need to do now? Well, if price is still going, let it go. There's nothing to do. You wait until this next level, or until price gets near that next level. You take it off as a win. But let's say that doesn't happen. Let's say it gets up here and starts coming back, and now you think, well, maybe it's not going to go long anymore. Well, now you can just take the trade off at break even or a small gain and see what happens. If it starts to stall a little bit but stays above a level, you may guess to buy again and get the trade. But if it starts to break down and go below the level, well, you didn't lose. Now from here, price is not at the level. It's near the level, but it's not at the level. So again, there's nothing you can do. But once price moves back to this level, and let's say now instead of a buy, you take a sell. So same concept, same idea. We're at a level, so we can do something. We're going to make an educated guess that price is going to continue down. So in this case, let's say we take a sell, price continues to move up. Well, price has moved away from the level. It's going the wrong way. So what we would do is cut this at or before halfway to the next level. If it comes back, oh well, who cares? Start over, refresh again. But let's say instead of going the wrong way, again, it goes down, you target the next level, take it off there. You can either take it off at the target or anywhere better than halfway. Now what you're going to wind up with over time is half of these will win and half will lose. A 50% hit rate that does better than 1-to-1, even though it's not exciting, it's extremely difficult, almost very challenging. You have to try to lose money. Mathematically, you will always, to some extent, make money as long as you are closing winners out better than halfway to the target of the next level, and you're stopping losers at halfway or less when you get it wrong. And by only trading at these levels, you have very clear marks of where to go, and you have very clear definitions of where you can define your risk and add in and figure out all of that. And you really don't even have to use any type of averaging in or adding on when you're winning. You can, but it does increase your risk, obviously. Plus, you're going to be probably trading at away from the level, which is a bad idea. So just follow those two simple steps. Is price at a level? Yes or no? If yes, make an educated guess and take the trade. Then you just simply wait for price to leave the level at which you took the trade. If it is going the correct direction, you let it go until the next level. If it's going the wrong way, as long as it's away from this level and going the wrong way, you close it and take a small loss. And then you just repeat the process. If price is at a level, make an educated guess. If it's going right, let it go to the next level. And in a perfect world, you'll get 1-to-2, which means you only need to win 3 out of 10. And you're actually going to win 5 out of 10 on most cases. And it's going to work the same no matter what you're doing, what time frame, so on and so forth. It will work the same way on every one. It will work the same way in every instrument. And before you raised the question about hedging, let's look at that example as a hedge. So let's take the same example. You had price going. You assume it's going to buy. It's going to go back long, so you buy. Well, price goes down here, and you got another level down here, but price was going below the level, so instead of taking a loss, you hedge. Same thing there. You're going to end up being away from the level. You may end up getting trapped. You could be going back the other way, so on and so forth, and you just end up creating a bigger mess. But let's say you don't hedge. Let's say you do the average in method. Well, we know that half the distance here would be, let's say, so example, let's say we buy here and buy here. So that means our break-even point is halfway. Well, that means we lost half of this, but gained half of this. So all we did was neutralize the other trade, and it would seem that there would be a higher risk. So really, it's the same thing as if you just stopped out here, waited for price to come to the level, assumed buy again, comes back up, and you just closed it at exactly halfway to the next level instead of getting more than halfway to the next level. So as you can see, once you break it all down and simplify it, because the more I learn, the more I progress, the further I go, the more I realize the more you take away, the better the results become. So you can say, okay, let's add this indicator, let's add this little concept, let's add, whatever. There are thousands of different things out there. All you're going to do is destroy this number, make it worse to where you're losing 6 times out of 10, and now you're going to need to get even more. And the further that trade has to go, such as the higher risk reward ratios, the harder it's going to be. So all you have to do is just follow those couple of simple steps, and it will be far less stressful, far less complicated, and you will have far fewer worries in trying to trade, and it's just mathematical. It makes money. So, pretty much, I mean, that's all I'm doing. I mean, it's just the law of averages is going to work. If you're scalping, you're probably going to take a few more trades. So you might have 5 or 6 trades in a day. Your levels will be closer together. You may be closing out a loss at 10 pips, but trying to take 20 pips on a Euro USD, for example. So, you know, if you're risking $20, you might lose 10, but you make 20. And then once it's all said and done, averaging out, for every 2 trades you take, you're going to have a profit of $10. So if you take 10 trades, you should make $50, theoretically, minus your losses. At half of that, at 25, that's going to leave you a net result of 25 in profit. It's not flashy, but it works. And if it works, why would you want to do anything different? The more you add to it, the harder it's going to be to win. And if you're not winning, if you're not taking more than you win, and by adding all this other stuff to it that everybody's talking about, all these different concepts, ideas, and tricks, and indicators, and moving average, and, you know, add 600 indicators down here, well, you just almost guaranteed you're not going to make money. Break it all down, strip all that away, take all the indicators out, pick some levels that are pretty well defined, and only trade at those levels, answering those 2 questions. And you'll easily work out to the 50-50. You'll do better than 1-to-1. You'll do like a 1.12 or 1.15, or if you're waiting for targets consistently, you're very likely going to end up with a 1-to-2. And at 50-50, it's hard to lose money. So that's really all there is to it. That's basically your end game. That's what you're going for, because that's all I've been doing for months, and about 3 months now. And it doesn't matter about your risk, risking 1%, risking 5%, risking a dollar amount. I mean, I'm trading a futures account that started at 200, and it's had a rough week this week, but despite taking some heavy losses on a couple of days, despite coming out even at the end of a couple of days, it is still doing way better than anything else I've ever done. The risk is irrelevant because it's making money, and as long as you're okay with losing, because you're not going to win every trade, clearly, then I don't see anything wrong with it. So, I mean, that's about as simple as I can break it down as, and you can see this for yourself in just about any chart that you pull up. I can pull up TradingView right now, and we got the Bitcoin up, and I can show you this example on Bitcoin. It's going to be the same idea. So let me see, I've got the Russell 2K, so that one kind of lost its mind. But notice, if we pick out levels here, which I've kind of stepped away from this one for a minute, just to kind of reduce where I needed to put my attention. But if we put this in pattern, notice, say we guessed long here, and it never quite reached halfway, started going back, we could have closed break even, and now we see that, okay, maybe that's probably going to be staying short, so when it comes back up, we can guess short here, 1-to-2. We lost 1 just by coming halfway or less. And then, you know, same thing here. We take the target, it comes down below, it came down to this one, and then starts coming back up. Okay, we can guess long because there's a level there. Take it to target, there's 1. Now we'd guess another way maybe because we're on a downtrend. And we just take the guess short this time. Boom, there's another win. Now we guess long, and you just flip back and forth that way. And a lot of times, once you take a loss, all you're doing is flipping that pattern around. Buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. Level to level, level to level, level to level. 1-to-2, all day long, every day. back to back to back to back to back. How do you lose money like that? It's mathematically impossible. So give that some practice, give it a try. I say it's what I do. 1 to 2. Boring, standard, ordinary 1 to 2s is generating those profits. I've been posting in the community on the community tab every day. Like, just do the same boring thing every day. Don't attempt to try to do anything crazy by averaging in or adding a whole bunch of stuff on. Just do the 1 to 2, level to level. Is it at a level? Guess. If not, wait. Okay, you're in a trade. Has price left a level? No, you wait. Price left a level? Yes. Okay, is it going the right way? Yes, let it go. Is it going the wrong way? No, or yes, then take it off. Wait for price to get to the level again. Trade again. Maybe win that one. Even if you lose 3, you win 2, you still come out one risk ahead. I mean, it takes a 33% hit rate at 1 to 2 to make money. And by doing it this way, you're going to hit 50-50. So I really don't see why anything else should really be done. I don't see why I need to add an RSI. I don't see why I need to study a MACD. I don't need to know, I don't understand why I need to pull 100 trend lines and read this average and look at this harmonic pattern and study Elliott waves. I just don't see the point. Simple and boring pays the bills. So I'm going to go ahead and wrap it up here just to keep things short. And I will hope to see you guys before much longer, but like I say, unfortunately, I am going to have to step away for a short bit, but I will hope to see you guys soon. Practice that. Trust me, and try it out for yourself. The only other thing I can say is, well, go ahead and make it complicated, but I guarantee you won't see any kind of great numbers like what I've been posting up. When I come back, maybe we can do some live trading and I can kind of show you this in real time, but like I say, I mean, it doesn't matter. Bitcoin, Euro USD, GBP USD, indices, DAXY, it's all the same. Price is moving, somebody's trading it, it has a point value. You catch a 1 to 2 at 50-50, no matter what you're trading, when you're trading it, it's gonna be very difficult, if not, I'm not gonna say completely impossible, because outliers happen, but it's going to be extremely difficult to not make money. I can just leave it at that. I mean, it's up to you. I mean, if you're trying to add more things to it, or you're not holding it long enough to hold the target, if it's just barely getting into profit and you're closing it, and your wins are bigger than your losses, then mathematically, it's going to be very difficult to make money. But if you have a little patience and just wait it out, let price move, follow along with those 2 questions and answers. I gave you a couple, both different ways it could go. Just stick to that. It's boring, but it works. But let me know how you guys fare. Give it a shot for a couple of weeks and then come back and comment later how you fared. I'm curious how well you can catch it. I know I try not to be complicated, but I do sometimes end up being that way. But I mean, this is really just kind of difficult to complicate. It's just those couple of simple things, and I've been doing that across every single system, method, chart, instrument, time frame. It's all the same. So, best of luck. Get some practice, get some reps in, get familiar with what you're seeing, practice to figure out your risk. If you're doing a demo account and you're trading at a certain size that you're comfortable with, you like the numbers you're seeing, then when you transfer to real market, use that same size. If it seems low, size up a little bit more. If it seems high, size down a little bit. But I mean, trading that way, I mean, as long as you're following that system, you should be consistent. And if you're consistent, you can risk anything you want. I mean, that's what it boils down to. So, best of luck. I will catch you guys soon, hopefully.